Hello and welcome to The Economy. I'm your host, Albert K. Liu. Coming up on the program, how do world events and macroeconomics affect your investments? Legendary investor Rick Rule of Sprott USA joins me today to discuss the potential impact of future Fed policy, a Greek exit from the euro, and the escalating tension in Ukraine. Also on the program, Rick Maybury, the publisher of U.S. and World Early Warning Report, draws parallels between the U.S. government and your mother-in-law. Don't go anywhere. You don't want to miss this. You're listening to The Economy for Friday, February 13th. Welcome to the program and thanks for joining me. Got a great show for you today. Today I'm going to be talking with two guests about the question, how do those events we see in the news affect our investment portfolios? I've got two great guests to discuss this question. The first is an investment legend, Rick Rule of Sprott USA. And the second is Richard Maybury, a former war veteran, teacher, and geopolitical analyst. So both of these gentlemen are joining me today to talk about this important issue. The first up is Rick Rule, who joins me from California. Rick, thanks for joining me today. How are you?
I'm fine, Albert. And by the way, it's always a pleasure.
I really appreciate you coming on, and with everything going on in the economy and politically around the world, I thought it would be a great time to catch up with you. The last time I saw you, I believe, it was at a conference, and I distinctly remember a conversation we had. I was talking about the nature of the conference, the speakers and whatnot, and you mentioned that yourself personally, you preferred the deep down and dirty micro-analysis, investing analysis, as opposed to the macroeconomic analysis. And it does make sense given your trade and your training. But I want to ask you this. The nature of the mining industry does lend itself to large dislocations. And you know better than anyone what they are: production cycle, the capital intensity, the political sensitivity. And so with all of these things going on in the macro space, for example, oil collapsing, the strong dollar, you have to acknowledge sort of the importance and the effects of the macro economy. And when you say things like, for example, bear markets are the authors of bull markets, there's sort of an implicit acknowledgement of this fact. So what I want to know is, how do you approach these macro events, and what is your basic strategy for avoiding getting crushed by these things?
Well, the first is simply to acknowledge the cyclicality and volatility inherent in all markets, but in particular in natural resource markets. The truth is that, and we've talked about this specifically before, Albert, in terms of people's responses to events, people's experience in the immediate past is the most important component of their estimation of the future, which means that bull markets are for a while self-sustaining, as are bear markets. And an acknowledgement of the fact that a market in the near term is a beast of emotion rather than a beast of empiricism can enable you to be a true contrarian, can enable you to remember to be a seller when you are feeling the best about the successes around your investments, and can enable you to be a buyer when all about you despair.
And I just want you to comment on how important these events or non-events would be to your activities as a mining investor. Some of these would be catastrophic in terms of society and whatnot, but I want to get your input on just as a mining investor. For example, a Greek exit from the euro, significant or not significant?
Non-event.
Interesting. Care to say why?
Greece's contribution to global GDP is, from a statistical point of view, not important. Important to Greek people, of course. And the exit of Greece and the concomitant losses, the concomitant default suffered by the banks on Greek sovereign debt would be easy to make up, given the level of confidence that exists in the global financial community, and given the tolerance that investors, savers, and voters have for what they call quantitative easing, and you and I would call counterfeiting. The amount of counterfeiting that would be required to repair the holes in the global financial system from a Greek default would be de minimis.
I see. Okay, so a European version of TARP, you're saying, would just paper over this thing and it would be just a minor speed bump.
Yeah, it may have already occurred.
Right. Escalating military conflict in the Ukraine, possible war with Russia.
Probably much more important. A escalation in the Ukraine wouldn't necessarily presage escalations in conflicts elsewhere, but the perception that that would be the case and the preparation for it to be the case and the increase in the consumption of private savings by the state, both in Western nations and Russia, would be very, very, very bad for the global economy. There is no good that can come out of this.
As it pertains to investing, though, in energy and mining, what would you think would happen?
I think it will continue a global economic slowdown. I think it will continue to constrain demand as more time, effort, and treasure goes into a stupid conflict. Less resources will be left in private hands to increase the common material utility of mankind. And that will weigh negatively on demand for a broad range of materials. Certainly, a conflict in the short term is good for oil demand. You have to put petroleum in all those idiotic tanks and planes. But just as it is a mistake to suggest that the destruction that occurs in a natural disaster is good for the economy because the place needs to be rebuilt. Remember that you're cannibalizing resources available elsewhere. The idea that war is good for an economy is a hideous misnomer. Good for the state, to be sure, but the state itself is not good for the economy.
Wow, you're sounding like an economist now. If that bothers you, let me know and I'll cut it out of the final production.
What I'm not, what I am is somebody who gauges any debtor's ability to repay, including a sovereign debtor's ability to repay. If that makes me an economist, I guess I'm an economist out of self-defense.
It's a credit analyst's view of the world. I love it. The possibility of a reversal in Fed policy, meaning another QE and then backing off their commitment, I guess, to increase interest rates.
Probably beneficial for precious metals prices, probably hard on all other industrial materials.
Great answers. Okay. I want to move on to some of the free resources you offer. Obviously, if someone is listening to this, they're interested in your viewpoint. And through our conversations, I've really benefited from a lot of the insights that you've shared, but as well as some of these free resources that you provide. And so it started with an investment lecture series you did at Liberty Me, which I thoroughly enjoyed. And what I enjoyed about that is, for the first time, aside from maybe reading Graham Dodd, someone attempted to reduce the activity of investing to, as much as possible, to a series of concrete, actionable steps, like asking questions, tracking expenses, being patient, and not attributing success to, for instance, some uncanny ability to time the market. Can you talk a little bit about that investment series?
Yeah, Liberty.me has an awful lot of discussions that are of use to people with a wide range of interests. I contribute where I can, and that's primarily with regards to investments. And I did a series for people at Liberty.me that talked really about the how-to of speculation. What's been lovely about, and by the way, that is, as you suggest, available for free at Liberty.me and is really worth people's while, I think, in terms of suffering through the 4-hour series. It will make people better investors or speculators almost without regard to how much existing experience they have. What's probably more important is that lecture series have sponsored or have caused really a series of discussions in the Liberty.me forums. And some of the discussion threads have become extraordinarily sophisticated.
Also in that series, I think it was part of the discussion afterward, you recommended another free resource that you offer. This is through Sprott, and it's the Mining Investment College course that you participated in years ago. You did a very nice presentation just on basically treating investing as you would a business. And so I really like that. Can you just elaborate a little bit on that? Why should investing be looked at as a business?
Well, I think that's what it is. People tend to regard stocks as sort of ephemeral quotes on a computer screen. That's not what they are. A share of stock represents fractional ownership in a business. And the price information, that is the quote, is useful only in the context that it varies substantially from the value. Money is made in the markets by arbitraging price versus net present value or risk-adjusted future net present values. Your business as an investor is to maintain a portfolio of fractional ownership in other businesses. A very small Berkshire Hathaway means that you understand the process that you're involved in. Without understanding the process, the idea that you could be successful accidentally, I guess, has statistical possibility, but it's not a probability.
It's funny you mentioned Berkshire Hathaway because that description sounds like something you would read right out of his newsletter. Another thing that caught my attention was your discussion, and I know it's been some time, so you might not remember, but your discussion of gambling versus speculation in that video sounded like it came right out of the pages of Human Action. And I'm wondering, what were you reading at that time, and is it just a coincidence?
I had not yet read Human Action at that point in time. Human Action is a truly spectacular book. It's probably the most impactful book I have ever read in my life. Really, it came out of my own experience describing what I do and how to do it to many constituents, prospective customers, actual customers, and employees. The continual reference of speculation to gambling, I thought, constituted a mistake. And at the point in time when I made the remarks that you refer to, there were several investment conferences held annually in Las Vegas. And I always used Las Vegas as a metaphor for speculation, explaining to people who were there that the gambling metaphor was apt, perhaps, in the way that they speculated, but that the outcome, if they regarded speculation as gambling, was going to be the same. You know, if you walk through a big casino in Las Vegas, you can tell with the capital expenditure in that casino that it wasn't built by winners. It was built by losers. And if you regard speculation as gambling, you will lose just as certainly as you will in Las Vegas.
I think Mises said that the gambler controls none of the factors that influence the outcome, whereas a speculator controls some of the factors that control the outcome. And I think it's a very good way of looking at it. There's another thing that you said, and this pertains to treating investing as a business, is establish the cost of your inputs. And I love the way you described your activities as basically a knowledge business, taking information in and applying mental effort and coming out with something that's on the other side of this imaginary pipeline, which is basically knowledge. And so it's important to know, just like in the example you used, an operation of baking bread, to know the price of your inputs. And I want to go through some of these because it's been some time since you made that video. And I'd like to talk about maybe how some of these have changed. For example, you like to price your input capital, back then anyway, at the 30-year rate plus 3%. And I believe this video was made sometime in the 80s. I may be mistaken, but a lot has changed back then. And one thing that's changed is the central bank used to use as its primary influence the short-term loan market, meaning it would act on the short end of the curve. Now with QE and the imagination of Ben Bernanke, you see them employing other methods now that influence higher up the yield curve. Can you use the same price of capital, the 30-year? Is that still a reasonable indicator of what capital really costs? It's the 30-year plus 3 is what you said.
Yeah, I hadn't thought about that in that context, and I want to thank you for bringing it to my attention. I think we did have fairer interest rate markets then, less manipulated interest rate markets. And I know from my own viewpoint now that I regard my own cost of capital as being LIBOR plus 5. I do that because I think that there's a probability rather than a possibility that in the out years, the nominal interest rate will rise. That, as you point out, the operations of the Feds and others have artificially lowered interest rates. And for most of my investments and most of my speculations, I don't have access to fixed rate borrowings and hence fixed rate cost of capital. So your point is well taken. The 30-year Treasury rate improperly understates one's avoided cost.
And I just want to remind everyone listening that you can find everything we've discussed here on a special resource page I've created for Rick at powerandmarket.com/rule, RULE. I also want to point out that you're offering a free gold book, which is an extensive 200-page plus book written by Eric Sprott on the topic of gold. This is not marketing fluff that you might get from typical precious metals broker. This is actually written by Eric Sprott. I think it's wonderful that you offer it for free. So all of this is available at powerandmarket.com/rule. The video is linked, the mining college course. It's actually a 6-video course that is linked. And also the Liberty Me series, which is essentially free because it's included in a membership, and you can get a 1-month free trial membership at Liberty Me. Rick, thank you so much for joining me. I really enjoyed it, and I want to thank you on behalf of me and my listeners.
Well, it's certainly a pleasure, Albert. I understand that your next guest is Rick Maybury, who has been a friend and client and colleague of mine, I'm embarrassed to say, for 3 decades. Not embarrassing him, just embarrassed how long I've been on Earth. And I know that your listeners will enjoy Rick Maybury's ethical, intelligent, and entertaining point of view. And I'd like to thank you for asking me questions that were interesting and fun to answer. I do a lot of interviews, as you know, and sometimes it's a real challenge to answer the questions that are asked me with a straight face. So thank you for being a perceptive interviewer.
Well, thank you. And it's a good thing we can't actually see you, Rick, so I'll take your word on the straight face.
Thank you.
Richard Maybury is the publisher of U.S. and World Early Warning Report, and he joins me today on the program. Rick, it's always great to talk to you. Thanks for joining me today.
Thanks, Albert. I always enjoy it. You do a great job here, and I enjoy it a lot.
Thank you so much. And I think it was earlier this week or the end of last week, there was a story that reminded me of you because last time you were on, we were talking about Cuba and how normalizing relations with them would be a good thing. We both tended to agree on that. I saw a story that Netflix is going to be in Cuba, and the reason I thought that was funny is you've mentioned in your newsletter too many times how effective a propaganda tool Hollywood has been in the past. So you have this country emerging from this communist isolation, coming into the free world, and then we right away hit them with Hollywood. I thought that was somewhat funny.
Yeah, one of the really great things about this country is that there is such a thing as freedom of speech and freedom of press, and Hollywood uses that a lot. Now, I think they do a lot of stuff that's harmful, but by simply depicting American life, they have spread that image of American life all over the world and created a sort of comparison that everybody in every country uses to judge how their government is doing and how well they are living. And I can't think of anything more subversive in a place like Cuba than to simply show them that, is your government really doing something that will help you live as well as the Americans are? Do you really believe that? So the more Netflix gets around the world, very likely the better off that we're all going to be, because a whole lot of governments are going to be in more and more trouble as their people compare the image of America to the way they live.
Very good point. Let's move on to your most recent newsletter, the February Early Warning Report. Mm-hmm. It started with what I found to be very accurate, I think, but also a very humorous depiction of the U.S. government and its adventures abroad, and you compared it to a bad mother-in-law. Now, I know bad mother-in-laws exist somewhere. I personally have no knowledge of this, but but that was the comparison you made. Can you tell me where that comparison came from and why you think that it's accurate here?
Well, for reasons I do not understand, and I point this out in early warning report, that issue. Mother-in-laws have a reputation around the world in all cultures, even as I pointed out in the jungles of New Guinea. There's a reputation for mothers-in-law of them being meddlesome busybodies and this sort of thing. Now, again, as you point out, there are millions and millions of mothers-in-law who are wonderful people, and I've known some myself. But there's something that goes on in human biology that creates this reputation for the mother-in-law who meddles. And the U.S. government, Americans generally aren't aware of this, the U.S. government is seen pretty much as the textbook example of the mother-in-law from hell all over the world. They stick their noses into everybody's business, no matter where you are anywhere in the world. And this became it was already going on for all of U.S. history, but after World War II, it just got horrible. The whole world was re-engineered, redesigned according to plans made in Washington, D.C., or plans that Washington, D.C. was friendly to that were created somewhere else. And at that time, in the 1940s, you had the UN created, you had NATO created, you had the Bretton Woods Monetary Agreement created, and the International Monetary Fund, the World Bank. This global economic structure was erected on plans made in Washington, D.C. And the world eventually wound up living its life according to these U.S. federal government outlines, these plans. And here we are today in the year 2015, a long time after World War II ended, and the whole world is still essentially living within these blueprints that were approved in Washington, D.C. And the big problem here is they don't work. As we're finding out now, there's just more and more trouble as the world tries to live according to these structures that these American politicians back in the 1940s imposed on the world. And they are presented in American history books in the schools and colleges as the U.S. helping the world. And the world was joyful about having this U.S. leadership. But actually, if you look back then, and you put yourself in the position of somewhere else in the world, you have individuals from the U.S. coming to your country, and these individuals control 105 aircraft carriers, and they just recently dropped atomic bombs on people, and they're telling you that they've got this great new system that you have to join up to. Well, are you going to say no? My guess is that you're not only going to say yes, but you're going to do it with a big smile on your face. And that's essentially what happened all over the world. And U.S. officials just got their way, and they've had their way ever since. And you will find them meddling in the politics of practically every country on earth. A good statistic is just in Latin America alone, the federal government altered or completely replaced 41 governments. And you can imagine what people in other countries feel about that. How would an Americans like it if somebody from, well, let's say Honduras came to the United States and started changing things? I would imagine they wouldn't like it very much. And so that's the situation America is in. The politicians of the past created a structure that now people like Obama have bought into, have taken an oath to enforce, and it doesn't work. There's this colossal economic and monetary disaster that's just spreading all over the world, and it's basically been constructed according to U.S. plans, and it's not working. And those people over there know where it came from. And so it can't be a help to the United States.
It's very interesting when you flip the tables, isn't it? There's people here that don't even like to have their landscaping done by Mexicans, let alone have their constitution rewritten.
Yeah.
But these problems, these problems are run quite deep because if I hypothetically wanted to escape my real mother-in-law, I could probably do so by going to the Ukraine. Not so in this case. And with all of the things going on there, how do you see, for instance, the tension building in the Ukraine set to affect markets? I know we see this in the oil industry already with layoffs all over the place and now strikes. How do you see these particular global events affecting our investments going forward?
In one very big way, as well as numerous small ones. The very big way is that they create fear. When you have politicians and these career bureaucrats who are really just politicians, when you have them getting into other people's business in other parts of the world, nobody knows what's going to happen. And that's the key point to it. All of your analysis of all of your investments just goes right out the door when politics comes in, because you don't know what those people are going to do. Each of those people has his own personal agenda. Sometimes it's hidden, sometimes it's not, but it's his agenda. He has some idea of how he thinks the world ought to be run, and he's sticking his nose into somebody else's business, and nobody knows what's going to come from that. And this uncertainty makes people afraid to make long-term commitments. They might be willing to lend their money to something for a day or two or a week or a month, but you get out as far as a year, they start getting really scared about a commitment because they don't know what these governments are going to do.
We are running out of time here, so I just want to share one more funny thought with you, and then we'll talk about what you've been working on lately. But last time you mentioned to me that Russian instability is a big concern, and the low oil prices are the primary actor here in destabilizing that government, and you have who knows how many nuclear weapons that could be set free. The logical conclusion, if you extrapolate from what you just said, though, is that we need higher gas prices, so we all need to drive bigger and more gas-guzzling cars to save the world.
Well, I don't know if I jumped to that conclusion, but as far as the danger that it has developed with these low oil prices, the political danger and the military danger, it is extreme, and that's another thing. I don't understand why the mainstream press hasn't figured this out. People have forgotten the 1990s when the Soviet nuclear weapons were found to be unsecured. There were thousands and thousands of Soviet nuclear warheads that were in warehouses that were just locked with padlocks. And that's all there was. That was the only security there was to these thousands of nuclear weapons. And nobody knows how many of those nuclear weapons got loose. We don't know how many. These were mostly bomb cores that you need for making an atomic bomb. The Soviet government, was a Soviet socialist government, was socialist, and it did a lousy job of controlling its nuclear weapons, just like socialism does on everything else. The accounting and the inventory controls were terrible for keeping track of the nuclear weapons. And so there was no way to know how many they were supposed to have, which means there's no way to know how many disappeared. And who knows where they are or anything else about them right now. Okay, that was the situation in the 90s, and as far as anybody knows, we still have no idea how many of those things disappeared and are floating around over there. And now we're in a situation where Vladimir Putin is in charge of the nuclear weapons in Russia, and NATO is putting a huge amount of pressure on him and trying, apparently, to get him removed. And the way they're doing it is in cooperation with the Saudis, with the Saudi royal family. They're holding oil prices down so that there is a huge economic crisis in Russia, which is getting worse. And apparently the hope is that Putin will be overthrown.
Yeah, that didn't work so well in Iraq, did it? But I don't know where those nukes went, but I know who I would ask. I would ask ex-Soviet mother-in-laws.
Yeah, right. Yeah. Actually, there's a lot of truth in what you say. the Soviet troops have families, and they would write home to their families and tell them what they were seeing and all. And there are a lot of descriptions that can't come out of that 1990s period where the Soviet troops are writing to their families and saying, there's nobody in charge here and nobody's paying me. I'm hungry. There's nobody feeding me. And so I'm going to start walking home. And these troops who were in charge of the nuclear weapons just walked off the job and went home.
Wow. We're out of time, Rick, but before I let you go, I want to ask you about what you've been working on. I know you recently published and released a special report. Can you tell us about that?
Yes. That is a big project that we finished just a few weeks ago. It's an accumulation and an organization of I don't know how many dozens of articles from Early Warning Report that were printed over the last 10 years or so that explain what's going on with the collapse of the U.S. empire. Now, I'm not talking about the collapse of the United States. I'm talking about the collapse of Washington's global empire. I point out to people that the other three great empires of the 20th century, the Russian Empire, the French Empire, and the British Empire, they're all either totally gone or mostly gone now. And all three of those countries are much better places to live than they were when they had empires. And America will be too. When we get rid of this cancer, then we will be better off too. And this is a wonderful thing. We should rejoice about it. But there's going to be a transition period. We're in this transition period now. It's very hard, probably going to get harder. But when we get out of it on the other side, it'll be this country's chance to make a fresh start. And we can go back to being the real America again. And I, for one, am really excited about this. But you got to understand it. And you got to know the kinds of things to invest in that are going to produce profits instead of losses in this environment.
Where can we pick up that report?
It's on our website, and the website's URL is richard-maybury.com. Also, we have an 800 number. That's 800-509-5400.
Excellent. So that's richard-maybury.com. And then you've also given us permission to give a free sample of a past issue of Early Warning Report. And I have that on a special landing page here for you. That's poweredmarket.com/Maybury, Maybury. Go there to get your free download of a past issue of Early Warning Report. Richard, it's always great to talk to you, and thanks for coming on the show again, and I hope you'll come back again soon.
Yes, thank you, Albert. Again, you're just doing a wonderful job here, and I wish you every success.
Appreciate it. Thanks.
Thank you.
My thanks to Rick Rule and Richard Maybury for joining me today. Don't forget to take advantage of Rick Rule's free investing seminar at poweredmarket.com/rule. And while you're there, pick up the Sprott Gold Book, absolutely free. Also, if you'd like to read a sample issue of Richard Maybury's U.S. and World Early Warning Report newsletter, go to poweredmarket.com/Maybury to access your free download. That's poweredmarket.com/Maybury, Maybury. If you have a question or comment, please send it along to question@poweredmarket.com, or you can always tweet @AlbertKLu. And that is The Economy for Friday, February 13th. Until next time, take care.
The Economy was brought to you by WB Wealth Management, an independent fee-based financial advisory firm, and the Woodlands Bullion Company, your exclusive source for precious metals. Visit us online at wbadvisors.com. The Economy is produced by WB Wealth Management in cooperation with Mixed Signal Innovations, LLC. This program is intended for informational purposes only and is not an offer to buy or sell securities or alternative investments.